Hey, welcome everybody to the 40 Finance channel. Jeff Beers again. I'm actually just hanging at my desk today and instead of doing the full PowerPoint presentation. And I wanted to talk about one concern that I have going into this year, particularly in August and September, and that is the NFL season. And while the NFL is not directly tied to the stock market, like most other things I talk about, I think that a potential cancellation of the NFL season would have a significant impact on the stock market, and that cancellation would come at a time when the stock market is under the most burden from this whole coronavirus situation that we've seen come through. So obviously here in July, we've seen the market continue to go up, very similar to June. And I think that part of the reason for this continual uptick is there's really hasn't been a lot of negative economic factors that have come out since things have reopened. If you go back to, let's just say Memorial Day going forward, you've had a lot of stuff turn back on. Here in Cincinnati, we had youth sports games that were back on. Restaurants, although at 50% capacity, they were open. And generally speaking, outside of just a handful of super public activities like concerts and everything, the city is kind of back to normal. And while I have noticed that Texas and Florida and some of those places this week coming off the 4th of July have been hit really hard, particularly in hospitalizations. And I wish everybody in those parts of our country the best, and hopefully that everyone stays safe. But what has closed or been open has doesn't seem to have changed too much despite this recent news. Now, obviously, if the healthcare systems continue to struggle, I think that those governments in particular localities will have to reanalyze their plan. I know that Miami's already started doing that. But the bottom line here is we've been open for 45 days or so, and the market has went up probably almost every day in that stretch, and there just hasn't been much to take it down. But if we fast forward a little bit ahead to, let's call it mid-August, when we have schools starting to go back into session, we will have some sort of feedback from Major League Baseball and NBA and NHL as they attempt to launch a season. And by that time, if we start to see that those 3 or 4 activities, which is going to bring many people together, right? Schools, even NBA games without fans, you're going to have a lot of people coming together. And if there's problems in that realm, which would lead to the NFL, raising their hand and saying, hey, September, we were supposed to play on September 10th or whatever it is, we are out. Season has been delayed. Then I think that that's a pretty strong statement that despite everyone's best efforts, we just can't continue to move along during this crisis that we're in. And I think the stock market would take note, and the reality would just be way too obvious at that point. Things that we thought were going to happen, say in Q4, tourism, cruises, all those things. If that series of events, if you had the first sports leagues to cancel midstream, if you had problems at schools reopening, and then ultimately the cancellation of the NFL season, I think is enough to crash the stock market. Just because any positive vibes that were still left by that time, I think would be squashed. And that's just mid-August. So let's just say the NFL gets a couple weeks under their belt before they have to cancel. Now we would be pressing up against that Q3, Q4 timeline, which is arguably Q4 is the most important quarter for many companies, and Q3 is probably not very far behind when you take into account back to school. What has happened in the past from a travel standpoint. You have business conferences, all these things that are probably not going to happen this year. And I think that the weight of everything toppling at that standpoint is going to be a pretty big problem. And keep in mind that it's not really like the NFL league or the players that I'm concerned about. It's all the things that are attached to the football economy, right? I made a little list for myself prior to this video, and I won't bore you by reading them all, but I just did a quick brainstorm of companies that would likely lose substantial revenue from any sort of NFL closure. And then you'd have to assume if the NFL is not playing, I think college football is going to be debatable at best, just because you're dealing with amateurs, amateur athletes. But let's just assume that college gives it a try too. And they would, if they were going to crash or cancel, then my guess is that would be somewhere in the September timeline, very similar to the NFL. You're looking at companies like Dick's Sporting Goods, SiriusXM, Under Armour, Nike, Finish Line, Dish Network, Domino's Pizza, Marriott, MGM, Molson Coors, Viacom, Visa, Fox Corporation, Electronic Arts, Anheuser-Busch, InBev, anything that is even remotely touches sports and sports travel is going to get wrecked by this thing. And you got to figure that even like a Walmart, right, who by itself is probably just fine without the NFL season, but their percentage of revenue tied to the NFL could represent a fairly sizable portion of their growth target, right? So what I mean by that is, let's say the NFL is worth 1%, just to pick a number here, of all Walmart revenues coming in during Q3 and Q4. So now there's less football parties, so there's less food and drink being sold, whatever merchandise Walmart handles for the NFL, that's going to go down as well. You also start to talk about electronics and big screen TVs and whatever people thought that they were going to buy to watch their favorite team play, that would all be down. And so Walmart will not go bankrupt because of the NFL not playing. But if, a company that size, without even looking, they're probably in that 2 to 3% growth mode in their retail section, since they're so big. And you slice 1% of revenues away from NFL related purchases, including food, electronics, merchandise, then that's a pretty big hit to the growth target. And then you start talking about being flat for the year just from one season being canceled. Another thing to think about with a season cancellation is you have lots of people who are working in hospitality, parking, tickets, travel, all those things. Their jobs are basically going to disappear, similar to what they likely saw in March. However, there's going to be a huge segment of this business, if that's the case that we're in, where the NFL would cancel their season. Those jobs, instead of coming, being laid off in March and coming back in June and trying to ramp back up, I would say by then most companies would be done for the year. They would say, you know what, NFL couldn't pull it off, college, all those places couldn't pull it off. You're just furloughed indefinitely or laid off indefinitely. When we actually see a vaccine distributed to the public, then businesses and business leaders might feel more comfortable about ramping back up. But this could be the domino in this market. And I certainly don't hope, I'm not wishing for it, and I'm not advising against it. I have no knowledge that this would be happening right now. But what I am saying is that's a pretty strong domino, and it's a headline worth watching, how the NFL progresses through. We as stock market investors do get the benefit of NBA, Major League Baseball, and NHL trying to at least launch something this year. So we'll get a chance to see, I think it's roughly July 22nd is baseball, somewhere in there. Call it July 25th for fun. So we'll get to see how those experiments roll. MLB is outdoors. It's very similar to the NFL and how players would be, sort of grouped together and dugouts and all those things similar to sidelines. So we'll have to see if they can pull it off. If not, though, then these are going to be some major chips that I think will work against our investments for the final stretch of 2020. Another factor that could come into play with all this is other economic activity. There's some folks who believe that things like mortgages won't actually show their negative data until October. So if people elected for forbearance and they got forbearance for 90 days or 120 days, that will start to rear its ugly head. And the same goes for some companies too, right? They reported on Q1. That was only a partial quarter in America when it came to COVID. Q2 reporting will come out, here in mid to late July. So we'll see how a full COVID quarter looks for many companies. But once again, Q3 and Q4 are often the highlights for a lot of companies. So you're going to take away revenues from probably, two of the biggest quarters in the year. And that's going to put your annual reports looking pretty darn ugly heading into January and February. So, I hope this stuff doesn't happen, guys. I'm just throwing out my thoughts. I've been thinking a lot about the NFL season. I'm a huge fan. Go Eagles. I do a lot of stuff with fantasy football, regular fan of football. My kids play football, so I'm a fan. However, purpose of this video wasn't to talk about how much I like football and hope it comes back. It was trying to tie it to the stock market. So let me know what you think, if I'm crazy or if you see some lines connecting from your field when it comes down to a potential NFL cancellation. Love to read the comments. And if you're new to the channel, please consider liking and subscribing to the 40 Finance channel. Appreciate everybody's help, and we'll see you on the next video.